Hey! Wasabi! Guten Morgen. It's just 7:56. Hey, maybe click that like button while we wait. I'll start in a couple minutes at the top of the hour. We'll get on with it. $7.57. What's going on, Nuno? Okay, about 90 seconds. I did make a clip. It was a clip. Mina, you talking about the one where it says, hey, you should subscribe? It's a new feature of YouTube. Yeah. Yeah. It's a new feature of YouTube. So I thought I'd try it out. Yeah. Well, thank you. I guess I'm wearing a similar shirt, huh? Oh, it's on the YouTube channel, so go to Forex.Today/YouTube. Sorry, youtube.com/Forex.Today. Alrighty. Let me mark this. Okay, alrighty. It is Monday morning. Monday. Welcome to Forex.Today. The everlasting YouTube community of almost 19,000 foreign exchange traders stationed around the world. We're interested in things like trader psychology, technical analysis, fundamental analysis, macroeconomics. We're also going to look at the calendar for the week, looking for opportunities and risk events. There's more than just the Fed going on this week. It's a very important week for many reasons. So it's a good opportunity for us to get together as a community and support each other. So my name is Wayne McDonald, been on this journey for 20 years. Thank you for being on the journey with me. And without further ado, let's go. Never mad at the fact he's corrupt like a senator. Sold in a rope, but you treat it like soap on a rope because my beats and my lines are so dope. Oh, that's not what it says. Trading in off-exchange foreign... how about this? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, 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 man, the markets are moving. Hey, did you know? So, what's the Chinese company's name? Evergrande, right? I was reading somewhere that the amount of real estate that they're developing right now that's been paused because they ran out of money. Think of this. I'll say it again, maybe this time in English. There's a company in China that's in financial trouble. They develop real estate. Because they're in financial trouble and they can't pay interest on their loans, projects have stopped. So it begs the question, how many projects have been stopped? Partially developed, right? You can imagine skyscrapers are nothing but I-beams and you know, all that kind of stuff. So how many unbuilt buildings have been halted? The equivalent of Manhattan. That's how many skyscrapers and apartment buildings and everything that have been paused, partially built across China because of this one company. Manhattan. There's a Manhattan being built by one company. Holy smoke. So anyways, there's a lot going on. That's one trigger. Okay, that's one trigger. But everyone's really nervous because of the Fed meeting, and that's what it's all about. So maybe it's doubly important. So today I propose that we go through the calendar and look at the risk events for the week. Anyways, thank you for being here. Thank you for asking good questions. Thank you for your loyalty and the respect that you show me every day. I appreciate it. I appreciate the journey you're on, and I appreciate you. So thank you for being part of this valuable community we call Forex.Today. It is not the get-rich-quick scam channel. Okay? I've been trading longer. I've been trading Forex longer than your last Forex guru was alive. So anyways, cool, man. So thank you for being here, and I will do my best to serve you. You know, I serve you. So thank you for allowing me to serve you every day by being a subscriber. I'd like to thank Traders Way for being part of our community as well, because you're going to need to make that decision one day. Which broker do you use as a foreign exchange trader? And I say, hey, they have earned my loyalty and respect. The example I always give is when the Swiss National Bank lied to the entire world and the market blew up. And in seconds, brokers went bankrupt. The biggest broker in the United States went out of business. One of the biggest ones in Europe went out of business. Like, amazing, right? So what happened to Traders Way? Nothing. They were fine. Why? They actually enter your trades into the interbanking system. And I'm like, wow, that's it. That's evidence. To me, that's evidence. You know, that's not talk. That's evidence. Wow, they actually enter your trades into the interbanking system. That's my experience, right? And the other ones went out of business because, well, maybe they didn't. what were they doing then if they didn't enter the trades in the interbanking system? Maybe they were trading against their clients. I don't know. Anyway, so that's when they earned my loyalty and respect. So anyways, that's my experience. If you want to learn from that, great. But ultimately, you're going to need to choose a broker to trade because you can't enter the interbanking system as an independent trader. So you'll need a broker, and then the broker is going to need software, and then the software is going to need liquidity partners so that you have multiple banks and all that kind of stuff so you can find someone to be on the other side of your trade. That's a big, expensive, sophisticated system. So anyways, it'll come down to, yes, the spreads have to be competitive. Yes, the execution speed has to be fast, right? Yes, the swaps have to be good. But really what it comes down to is trust. So, tradersway.com. Yeah, Darko's like A books and B books and stuff like that. Yeah. So, you know, I don't sit around with the leadership of Traders Way and like, hey, so do you A book and B book and C book? You know, like that's not the relationship that I have. So I'm just sharing my experience of when things went crazy and brokers blew up and went out of business overnight. You got to remember the CEO of, let's say, FXCM, so that was Drew Niv at the time, he walked in and he was the biggest Forex broker in the world. And he walked into his offices down there on Water Street, which is right next to Wall Street, in downtown Manhattan. He walked in and they would have said, hey, boss, we're $500 million short. That would have been a terrible overnight. Can you imagine going to bed and you're like, I'm the CEO of the world's largest foreign exchange broker for retail traders. And then you wake up the next morning and, hey, we're out of business. So how do they get there? I don't know. That's not for me to judge. But it actually happened, right? And then eventually they sold the business. So all I know is Traders Way was never in trouble. When I contacted them, they're like, hey, we're fine. I said, you need to send an email to your clients because other brokers are not fine. So anyways, so that did it for me. That did it. I'm like, that's cool, man. All right, cool. All right, here we are. Yen is on fire. This is interesting because when Asia opened, this wasn't so strong. Yen was actually slightly weaker than the US dollar, which is kind of interesting. Dollar was stronger, yen was weaker. In the swing trading group, when we looked at, you know, the bullish long swings, we didn't find too many. There was no dollar trades for selling dollar at the time. There was, you know, it's funny now, but there were some hopeful yen potential setups for, again, based on sort of the macro play, of potential Japanese yen weakness, only in situations where you kind of had like triple bottoms. Okay. And in all of these cases, I'm like, this is what I wanted to see. I still need, even though we had the triple bottom, I want to see the higher high, higher low. And what we ended up doing is we ended up finding two that were like double bottoms or something, or triple bottoms. I forget which ones they were. I think one was a kiwi or something. And might have been, I can't remember, kiwi and CAD maybe, because they were like if there was any hope, those were the ones. And we had so much hope, right? If 3 trades is equal 1/3 of 1%, right? Meaning if 99 pips is equal to 1/3 of 1%, then we took one of the 3 trades and cut that in half. So it was 1/3. It was 1/2 of 1/3 of 1/3 of 1%. Yeah, and guess what? They didn't work out. That shows you the level of confidence, right? I think that was Thiago's idea too, to take one trade and cut that in halves. So anyways, yeah. So things, that yen is strong. And this is actually kind of interesting, but, you know, not on those, so that's great. So what I think is most important in the moment. So the markets are moving. Look, if you want to buy yens, I mean, look, we only have so much time together today, and I need us to go through the calendar, right? So you've probably been trading these all day, and you can continue. This is sort of a break in that process. So anyways, let's take a look at what's going on this week. RBA meeting minutes, okay? That's huge. So there's something that you can download in Asia, okay? Just put that on the to-do list. There's a lot to read about, or a lot going on this week. But if you have some, free time, maybe you can take a look at those, okay? Chinese interest rate decision, okay? That's huge. Bank of Japan interest rate decision. Well, so let's even go back. So, right, I missed retail sales. This is now, and this is sort of forward looking. Even though it's backwards, remember you're supposed to read the RBA meeting minutes, which is minutes from a previous meeting, but you're supposed to use that information to try to predict the future. So you're taking that past for forward guidance. Retail sales is how's it going now, okay? Then moving back on to, now you got this, interest rate decision. That's huge. Another interest rate decision. That's huge, okay? And then by Wednesday, now we got our Fed meeting. That's not even half of it yet, okay? RBA meeting minutes, again, a very good read. Retail sales, probably a good scalp, right? Chinese interest rate decision, Japanese interest rate decision, United States interest rate decision. And that's just between now and Wednesday. Holy smokes. There's a lot of real estate going on too. So let me make sure we got medium. We do have medium. Okay, good. So Swiss National Bank interest rate decision Thursday. Okay. Bank of England interest rate decision. Crazy, right? And that doesn't seem like that's all. We're missing stuff on here. So the BOE, I don't have Friday for some reason. Hang on. This doesn't seem right. Let me change some of this then. Let me add low, because there's a lot. There's Friday now anyways. Okay, this is what I want to look at. New home sales. I thought there was some other construction stuff earlier on. Hang on. Existing home sales. Okay, that's interesting. They have it marked low this time. That's interesting. So there's new home sales on Friday. There's existing home sales on Wednesday. This is important, especially if you're trying to predict if there's going to be continued economic expansion. I thought there was some more earlier on. Building permits, housing starts. Okay, that's on Tuesday. So anyways, lots of central bank decisions this week. Lots of U.S. Real estate, whether it's permits to build something in the future, actually starting the building of new houses, the actual sales of new houses, and then the resales of existing houses. Okay, we're going to get all of that this week. Remember, if you're afraid that you're going to lose your job, if you're afraid you're not going to get a raise, if you're afraid you're going to get a pay cut, you don't buy a new house. Okay? So, and also think of like what percentage of GDP is the housing market, not just the sale of houses, but, things like if you're building new decks, if you're renovating the inside of your house, if you're building swimming pools. Trust me, you got dozens and dozens of dudes hanging around your house and going to Home Depot 3 or 4 times a day, and that's money spent. That's productivity, that's economic activity, that's retail sales. You know, I mean, just there's a lot going on. So the real estate industry, directly and indirectly, is super, 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 super important. Okay, and if it's failing, then that's a good sign of where you are in the business cycle. Cool. So, anyways, it's strange that a lot of that is put on low. I think that I would say that's a mistake. So think of it. We got all the central banking stuff and all this real estate stuff this week. Super and super, super important trading week. I would guess that this is the most important week of the year. Think of that. Now, of course, yes, we talked about that in February, but now you can see it, like all that central bank news, okay? But of course, the biggest one is the Fed meeting on Wednesday, when hopefully they announce a taper. Okay? Okay? You said some weeks back that we may go back to 23 by 23 August by September. We are here. What? I'm not sure what you're saying, but yes, this is an important week and plausibly a turning point. Okay. So one way of looking at this. So let's go now to. I'll pick on yens. Okay. So, like pound yen, that is horrible. Okay? That is incredibly bearish, but also on a weekly point of view, like if you sold it here at 52, okay? We're at 49.5, and technically you really should stop. Okay? There's a monthly below that, and then the target is down there. So 48 is, right, is key, but that's basically a lower low. I mean, I don't know. That's a bit of a stretch, I think. Let's do it like that. This is the projected low for the week already based on what happened last week. Okay? So you see this down, 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 down. You look at this roll reversal. Okay? That sets up the front run, because remember, this is the bearish sell zone. And with that in mind, this is the projected low for the week. Okay? So now you have to decide what to do. Yeah, that's it. So if you're going to sell through the weekly pivots, you should just get rid of the weekly pivots. Okay? The monthly does say lower. Okay? At 48. Okay? Cool. Okay? Neat, right? Neato. Take a look at this. Let's say you don't like pivot points. That's fine. We can drag this across. You can see we're at key levels, right? Let's delete all the pivot points. Okay? You can see that, and let me delete this now, that this area here, 49 and 49.50, are pretty important based on support. So I don't know if you want to keep selling to take it down there. I mean, there's 50 more pips if you think you can do it. Just remember, though, some people do use pivot points, and those weekly pivot points are giving caution. Neat. Cool. Fine. Great. Great. Okay. Let's clean a lot of this up. So I want to put all of this on Confluence. Put this on Confluence. Put this on Confluence. Put this one back on Confluence. What's up, Petey? Tomas in Zambia. Welcome. Yeah, look at it taking down to the next level. Currently, risk off. Of course, our bigger risk event is Wednesday for the US dollar, and then there's also the yen is up on the block, and the Swiss franc is up on the block, the British pound is up on the block. There's a lot going on this week. So apparently, President Biden contacted Pfizer and said, I'd like to place an order for 500 million shots. Oh man, wouldn't you love to be the salesperson on the phone? Pfizer, this is Wayne speaking. How can I help you? Jeez, wouldn't that be great? Did you 500 million? You said, okay. Well, for 600 million, I can get you a 10% discount if you take it up to 600 million. Huh? It's craziness, isn't it? That's a big order. Yeah, same day. Yeah, can I get free delivery? Yeah, the thing is, he's going to give it to other people. So, yeah. So that's to give to other countries. All right. So, anyways, look at that yen. It is strong. Well, let's do some comparisons, shall we? Okay, Kiwi hasn't even hit the central yet. This would show evidence that the New Zealand dollar has been reasonably strong. Well, in that last period, that third week of August rally. That's cool, very interesting. Just as a reminder, I don't know if you've given up hope, okay? We said the third week of August, the yen pairs would rally. Then starting in early September, that is not likely to continue. Not necessarily, I didn't say down, but just not as up again, okay? But by the third week of September, I'm going to look for that to resume again. Just want to make sure everyone's on the clue train. I'm not saying up now, but by the end of the week, I would love to spot some evidence. Okay? Very similar to here. This was down, 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 down. Okay? So that's interesting. So it'd be interesting to bottom out there. But really, this is currently a yen story, not a Kiwi story. So we just have to wait our turn, wait our time. Okay. Fax companies have made over 50 billion. Yeah, thanks to COVID. Yeah. You know, and I'm pretty skeptical about the whole industry too. I'm sure they've cured type 2 diabetes a long time ago. Not type 1. That if you have type 1 diabetes, you're really effed. You're really screwed. You're going to be in a world of hurt your whole life. You're always afraid, right? Lots of things could go wrong at any time. Type 2 diabetes is curable, and I'm quite sure they've cured it long ago. Yeah. All right. So anyways, look at that. 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 It is falling hard. Okay, cool. Cool. Great. Great. Okay, great. Cool. Fine. I'm going to watch key levels, key areas. I'm hoping the stock market comes down pretty hard too. I'd love to see some sort of correction. I have cash on the side to buy the dip. And of course, there hasn't been a dip for a while, so I got more cash than I would like. So I need a dip for that account, right? I need a dip. I've been looking at a lot of different ETFs. I've been looking at a lot of different indices, like I've been thinking of some Chinese ADRs, and I've been looking at mining companies, and there's just a lot. And if I can pick up, hey man, a 5%, 10% discount, that'd be great, because I hold stock positions for decades in some cases, right? So ride these things out. X-Trader said, would you agree that given the global macro, meaning supply issues, shortages, and inflation, that the commodity currencies will rally the most? So you're saying because of potential growth and shortages, that commodity prices would be high, and therefore commodity currencies would rally the most. Well, that would be true, the high prices, but remember, if there's a supply issue, you're not selling. So you're like, oh, look at that. I mean, I know iron ore and coal prices have come down like 50%, but let's say they were still high. And I think they still are. I think it's 150 for iron ore. Is it coal? Maybe it's coal. It's 150. It was, and it was 50. And so and it was 200. So it's come from 200 to 150. Even 100 is a pretty good number. So you're like, well, we're profitable at 150. The thing is, if you have supply chain issue, it doesn't matter, because you can't get rid of it, because no one shows up. Right? Like if you can't deliver the product, it doesn't matter. You don't get paid. So anyways, but generally, like, the answer is basically yes, though. Okay. I think that could do fine. Although I think the market was overpriced early in the year, like lumber went up 300% and all that kind of stuff. So I think that's nonsense. But really what we need is to get through the supply issue. But I'll take the answer one step further, though, X-Trader. Am I going to build a portfolio specifically on commodities? No, I don't think so. But my opinion is, over the next 5 years, okay, so I'm not talking about today now, I'm talking about 5 years. Over the next 5 years, the US tapers. Okay, but essentially, let's say, doesn't raise interest rates. Now, let me preface this. Somewhere in the 5 years, they will raise from zero. But let's say we never really get beyond, we're not even normal. So like typically, we could be at 3 or 4 or 5% or something, right? So like in 5 years, we could go to like 2% or something, but still like ridiculously low. And what that tells me is that when interest rates are lower than growth, so let's say even in 5 years, GDP is 2.5%, but let's say interest rates are 1.75%, and inflation is 2.5. I know we'll kind of make them equal, or or even 3. We can, all of that is, if inflation and growth are equal, ideally you have 3% growth, 2% inflation, and let's say 1% interest rates. Maybe that's the trifecta. Okay? So GDP, inflation. Yeah, I like this. Let's go with this. And rates. Okay? I think we'll get something like this in, between now and 5 years. And what this means is, we're in like a Goldilocks scenario where we get through COVID. 5 years won't be as bad as now. And, sort of this global growth story will be there. The United States will tick along. Europe will kind of catch up and stabilize. And the supply chain troubles in Asia will stabilize. And here, really, too, I think emerging markets will do well, and frontier markets, if you want to really go out there. Thinking about Africa and stuff, like African countries, for example, probably more frontier than anything, will be able to supply the world with stuff and receive foreign direct investment from foreigners because they want more and more supply. And the supply is going to be because, the demand. So the world will demand, right? When there's global growth, and someone needs to supply the demand. And what should happen is demand will outstrip supply, and therefore rich countries will have to invest into, less developed economies. And that's where, like, the first part of this equation, emerging markets and frontier markets will benefit from selling their stuff to the rest of the world. And then they'll benefit again as the rest of the world says, oh my God, we need your stuff. We need more of your stuff. So we're going to invest into your economy so that you can supply more. Okay? And then maybe 5 to 10 years from now, some of those countries will say, well, let's produce, more sophisticated products, more sophisticated services, and they'll get that because of the investment, right? So anyways, I have a very positive outlook for the next 5 years. Okay. Why did Hong Kong market overnight? I have no idea what you're talking about. All right, you're going to restate it. Now, just so you guys know, China is closed today and tomorrow too. The markets are not even open. Okay, but this is definitely contagion fear, but I also think it's money coming out of the market before the Fed meeting. Yeah. Well, it's Evergrande, right? So, but don't think it's necessarily China. The Chinese market was closed, but the rest of the world is kind of going, if this spreads out, think of it this way. Here's how you guys should look at what's going on now in China. Some of this was already set up because of the crackdown on various countries, okay? Or companies, I should say, certain sectors by the Chinese government. Okay, we'll call it regulation and maybe over-regulation, but that's fine. But then Evergrande has had its problems. It started about a week ago. And maybe you want to look at what's happening, in a similar way that the subprime crisis happened. Now, I'm not predicting it goes into a subprime, like the 2007 crash. But the worry is it's contagion that Evergrande forces rates up, and now other developers and other borrowers can't afford to pay their debt as well, and it spreads. Okay? But look, just wait for the Fed meeting. Just chill out, man, right? Just chill out. If you're going to short-term short, then short-term short. I've been saying this for weeks now. If you're going to do it, do it. Right? If you're going to short-term short, great, then do it. I'm still waiting for the Fed meeting. Okay? I have like I just said, I have a 5-year view that global macroeconomics will provide global growth, global trade, global investment, right? And many countries will benefit. Many countries will benefit because the Fed, in my opinion, will have policies that are good for the rest of the world. Yes, we will taper and we'll stop quantitative easing. Fine. But see, if the Fed raises interest rates, then central banks around the world have to raise interest rates too. And when the United States raises interest rates, emerging market debt gets more expensive. So now they have to pay debt that costs more in terms of dollars. In particular, higher interest rates if they have to borrow at higher rates, okay? So that's bad for those that need to borrow a lot in emerging anything. Think of an emerging economy not as poor, but think of it as more like a startup. Because like Frontier would just be poor. Like, hey man, let's get some money into Afghanistan. Okay, that's a frontier market, okay? But if you're thinking about an emerging market, you know, there's some level of products and services and trade history and all that kind of stuff. So you might think of it more like a startup. Startups require a lot of investment. That's all. But there's a reason why you invest. Okay? So, great. But I think we're going to be in a world 5 years from now where interest rates in the United States are still ridiculously low and the stock market ridiculously high. There won't be any cheap deals in any stretch of the imagination in the US market. Real estate will be very expensive. The stock market will be very expensive. And what will happen is developed countries that have recovered from COVID will need to invest in other places. And that's good. But Art, is it 2007, 2008 again because of Evergrande? Probably not. Okay? So I think the world is just worried about this particular week as well. So I don't know. I'm going to wait a week before I'm in panic mode. That's all. Okay? I have a 5-year view. And yeah. And I will continue to do my analysis to make sure I'm right. But while I'm not right, doesn't mean I'm wrong, but while I'm not right, and that's confirmed by technical analysis, my goal is not to lose a lot of money. I want to keep my money around for when I am right. Okay? So, cool. Great. So, we're on our way down to the bottom of the range. That's okay. Should I be in panic mode? No. What's wrong with this? Okay. Cool. So this is coming down. Great. I want to wait. I got a Fed meeting. I got a Bank of England meeting. Right? Cool. So I'm going to wait. I said yesterday in Asia, when the day trading group got together, I'm like, I don't even want to look at this. Now, it's coming down. That's great. But you have to understand, I don't want to sell it in the moment, but nor do I want to buy it. Okay. Now, even for day trading, that's not even a good trade. You're like, well, it kicked off here. Well, the sell zone was up here, and it didn't even come back. Remember, if you're a bear, you were looking for this. Okay. So just because it's falling doesn't mean it was a good trade. At least set up the way I set things up. Okay. Okay, I walked away from CAD, and I am glad I did. Holy schnickerschnocker, huh? Just, yeah, baby. Holy smokes. Glad I didn't sell that. Kiwi, 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 can't you see? Just amazing. Okay, boom. So what do I know here? Well, what I know is if I'm a bull, I want this to go up. But if I'm a bear, I want to sell up here. So all you had was a Friday front run. Okay, that's it. So you sold it on Friday and you got paid today. If you sold it today, I might disagree with you a bit. There's a small set of trades in here. I would say this breach to that pullback. But again, now we're only talking 20 pips or something. So really there's nothing really there. So this trade is pretty good. Up right in this spot here. That's pretty good. That's pretty good. Yep. But this is crumbs. Okay. It's a half decent trade, a day late. Okay. And now look at this, step down. So this is again, this is in the day trading group that met last night. I was talking about this. I think we were here, or maybe we were even lower. I think we were probably even lower. And I'm like, look, even if I'm a bull, even if I like the 72, I'm like, even if that's the case, I need more meat on the bone before I take risk. And I'm drawing all this price action to say, when you look at this, it is bearish. My job is to say, I'm a bull. Okay, that's the first part of my job. The second part of my job is the market's not bullish. Okay. You see that? That's the first part of my job. I'm a bull. Great. Is this a good opportunity to buy? This was okay. The thing is, what's the missing part? Yes, that's a decent price, and just below us is a decent price. Remember, it's not about price alone. The other thing on your chart is time. So how do you know it's the right time to buy? And that's where not just technical analysis, because that tells us this is based on an algorithm of what happened last month. We set particular buy zones and sell zones. Okay, but that's just statistical analysis. What is the other part of technical analysis? And that's pattern recognition. And the patterns, like a reversal pattern, helps you with time, not price. Price is important because if you see a reversal pattern, but you're not at support or resistance, then it's probably fool's gold that you're looking at. You're just seeing a pattern that doesn't exist. It's a mirage. But if instead you said 72 is likely to be support, and then you see a reversal pattern, then it's believable. Okay? So my job is to say, based on fundamentals or seasonality or a flip of a coin, I want this to go up. Okay? I made the same call here and here and here. Okay? I want this to go up. At some point, you use technical analysis and you say, it's no longer going up. So now, again, I'm using seasonality to say, all right, well, probably this week. Remember, not last week, not next week. Okay? Back in February, we talked about this week having the potential. Okay? But that's seasonality. That's not technical analysis. So now we need technical analysis to say, well, sometime in this period, in the next, let's say, 5 trading days, somewhere in there, I would like to observe a change in trend. Double bottom would be great. Higher high would be great. Higher low would be great. And now I can trade my upward thesis. Okay. Matrix says, hey, my thoughts are on the banking cartels know that blah, 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 blah. Look, when I say I'm bearish on the dollar for the next 5 years, and I did that 18 months ago, actually more than 18 months ago now, but it's not traders. You have to understand the wonderful thing about the foreign exchange market is it's business activity. Banks can't get together and control that. Central banks try to influence it. But ultimately, it's millions and millions and millions and millions and actually billions and billions and billions of business transactions. Okay? Kama Dog says, you've been saying that for euro dollar for weeks now, right? What? Euro dollar up? No, I've been saying that it's the third week of September to be ready for it. That's what I've been saying for weeks. And now it's the 20th. Cool. It's now the third week. Okay. Now, what you've picked up on, Kema, is that I'm a macro bull. Okay? I'm a macro bull. Currently. Now, things could get worse with COVID, and maybe China does collapse because of debt problems. Okay, well, then I will have to adjust. But you have to understand, this to me is not surprising. PF says, Wayne, we had no bullish moves on dollar pairs? You're crazy. Well, maybe not. Anyways. So, well, if I'm wrong, PF, then I'm wrong. But I'm not ready to be wrong. Okay? I'm not ready for that. So, yeah. So I'm a bull on macroeconomics. I believe the worst is over. Okay? And I'm particular about this week. I'm going to be particular about this. And if Wednesday goes, I don't know, poorly. I don't know how to, I think I know what the Fed's going to say. Of course, I could be wrong. But I don't know how the market's going to interpret what the Fed's going to say. So I'm open-minded later this week, and I'll probably see it next week if I'm wrong. And I will need to adjust. Okay? But for example, PF and Kema, this move here is not surprising at all. That, to me, that's seasonal. Okay? This move, we all traded because, once again, I expect that. I expected that. Okay? My entire swing trading group got together and did it. Okay? And then when we got to here, this is when we stopped this because this is highly probable. Of course, you don't know, so I never recommended sell, but I recommend to stop buying, if you want to think of it that way. And now, if you in like I've been saying, in February, in March, in June, in even now in September, the third week, which is now, is a critical turning point in the market based on seasonality. Okay, so this may just keep going down because that's what's happening now. Okay, great. I understand that. That's what might happen. But also what might happen is the opposite. And what we're doing is sort of normal, okay, whatever that means, versus now. Every year is slightly different, but there are normal patterns. And what creates the normal patterns? Human activity. So look, normally we buy stuff from China and China sends us stuff. That would be normal. So if this year is abnormal, then that could affect the money flow and we may not get this move. The thing is, every single year, PF and Kema, every single year, this particular week is important to me. Okay? Cool. Cool. Okay? So it still rings true in my mind that this is an important part of the trading year, for example. Okay. So going back to, PF said we didn't have very many bullish moves. So let's go back through the year. Okay. In January, which is here, okay, I said sell. Said in the third week of January, there'd be a false rally, and there will probably be a bearish again until this period. There's a meeting in here, Fed meeting, and all that kind of stuff. And then we would be buyers again. This was bearish. Okay. And then at this period is bullish. Okay. Until the third week of June, which is here. Then we're at least, the very least, not bullish. And this would last until the third week of September. So let's kind of clear this out. Okay, this false rally is the third week of January, which is funny, but it's a false rally. So I'm going to put this third week. Okay, this, again, approximately third week of March. This is approximately third week of June. And this, right? And this would continue until the third week of Sep. Okay? That's correct. This has nothing to do with euro. Euro is impotent. Okay? How many people here can confirm that this is truth and not bullshit? How many people now actually know it, like it's incorporated into their year? Because I taught this year, last year, the year before, the year before that, 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 the year before that. Dude, I've been doing this a long time. I'm not making this up. And yes, some years are better than others. I'm hoping this year was better than the last, but last year was pretty decent. Right? Last year I said that last year would be different. Or was it the year before? I don't know. I get lost. I lose track of years. The exception is the fourth year of a political cycle. Okay? The fourth year of the political cycle is different. It's not the third week of September. It's the third week of November. Or whatever. It's the election night. Okay? So you can front run it maybe the third week of October instead of the third week of September. Okay? So guys, even if I'm wrong, you have to understand my consistent behavior is important to what I do. So even if I'm wrong this year and dollar gets ripper strong, COVID gets worse, there's a collapse in China, and it's just bad. It doesn't mean that the historical norm is wrong. Again, the analogy I look at is I'm a farmer. Okay? And there's a decent guess on when I should be tilling my soil in the spring. A pretty decent, regular kind of period of when I should plant seeds. And when I should fertilize, and I can watch the conditions. Do I need to irrigate? Do I need to add pesticide? And then there's a general period of time, every single year, generally speaking, about the same time of year, I'm harvesting. That's how I look at it. I'm a Forex farmer. Now, every year is generally the same, but at the same time, every year is different. You have to keep that in mind as well. I don't know how much it's going to rain next year. I don't know how hot it will be next year. I don't know how many bugs there will be next year. I don't know if there'll be hurricanes or tornadoes or floods or droughts or a plague of locusts. I don't know what the prices are going to be. Our wheat prices are going to be high. Our corn prices are going to be high. What about input costs like fertilizer and seed and pesticide? What are those prices going to be? I don't know if my tractor's going to break down. But generally speaking, next year will be like a typical year. So I'm trying to do a bit of both. Where this year was a perfect year. Do you know when I went on vacation? Right here. I said, I'm not a bull anymore. I'm going on vacation. Do you know what I did the year before? Exactly the same week. I'm not bullish anymore. I'm leaving and I went on vacation. What do you think I'm going to do next year? Try to guess. Okay? Because this is a good time, if you want to think of it as if I'm no longer bullish and I'm leaving the market. Maybe it's a crop you plant twice a year. I harvested and I went away. Okay? So I want you to understand my point of view. You may disagree with me, and I'm totally okay with that. But I'm trying to be clear on how I approach being a trader. And there are periods of time where I'm okay. I mean, I'm either short-term shorting this or I'm waiting. Okay? One of the things I don't want to do is get sucked into the vortex, right? I'm trying to be prepared. Okay? I'm prepping here. I'm a prepper. So anyways, that's that. That's all. That's what I'm trying to teach you. And it's okay if you don't use any of that. If you say, well, Wayne, it's all in the price. Okay, that's fine. That's fine. Okay. But wouldn't it be interesting if you said it's all in the price, but at the same time, because you know some seasonality, maybe I taught you a few things, this down is not surprising. Let's say you thought there was a 65% chance. We'll say 66. 2 years out of 3, there's downward pressure this time of year. And you're using your theory of it's all in the price. Okay? Then at some point, you will be setting up trades, right? If it's all in the price, then you definitely didn't miss this. Okay? Then great. That's great. Then that was helpful. Okay? Check this out. Rollover. Second rollover, call that a double top, divergence. What does this mean? There's no bulls on this upward move. See, people don't sell here because that's a bet. Some people sell here, but it also scares the heck out of bulls. And then, people are selling this, this, and this. That's actual selling. This isn't selling. This is profit taking. This is maybe some selling, but the real selling comes here. And that's what the divergence is showing. Just by the way, if you want to see how to put that together. Okay? Profit taking, selling. Okay? The divergence is literally bulls are gone. Does comparing of two countries' interest rates play a role in driving the direction of the market long term? Well, it's sort of, Banda. The answer is yes, but it's really why there's a divergence in central banking policy. That's what it truly is. Okay? Now, a carry trade is where you borrow from the cheap, so you get cheap debt, and then you invest it into investment. Okay, some of that is true, but what's most important is this flow, for example, let's say USA to China. Okay? The two superpowers of the world. This is much more important than anything else. Because China has other, right? So America buys stuff from China, China sends stuff to the United States. But then for China to make stuff, they buy stuff from Australia. Okay? So that is important. And then, right? Now, right now, China and Australia are not playing, right? China and Australia are not friendly with each other right now. So this loss of business to Australia, or the potential loss of business, impacts. Okay, if they get cut out of the cycle, then that's a problem. Okay. Okay. So this, what does this represent? Normal business. So China okay, imports 70% of its oil. Okay? All right, now think about this. Will China use energy next year? Will they use more energy or less energy or about the same? Well, you're like, well, without research, I don't know. Well, then do some research. Now, the second thing is, where does China get its energy? If its energy imports. Okay? Largely OPEC, Russia, and the United States. Okay. And more is going to come from the United States and Russia and less from OPEC. But OPEC will always be selling to China, so it'll be fine. I wrote a paper at Harvard about how the Middle East would be renamed the Far West. Because instead of oil coming out of the Middle East by ship and going to the United States, it'll make a left turn instead of a right turn, and it'll head to China. And so the supply chain will change directions. And therefore, from the Chinese point of view, the Middle East is the Far West. So it won't be called the Middle East anymore. That's an American point of view. So anyways, China's definitely going to do more business, and particularly with nat gas from the Russians. Okay? So Russia will survive by selling Europe natural gas. Europe made some really stupid mistakes over the last 30 years. Just ridiculously dumb, in my humble opinion, about their energy supply. And they're totally married to the Russians. Okay? Totally married to the Russians. They could have done lots of business with Africa, but they didn't. Out of just gross negligence and stupidity, in my humble opinion. And instead, they developed relationships with China. Great. With Russia. So Russian nat gas is going to go to Europe, but it's also going to go to China. So there's going to be a lot of money developed there. Well, see, now maybe that's good for ruble. Maybe your new China play could partially be in ruble. But also the United States sells a lot of oil now to China because the United States is actually independent now. It produces enough oil for itself, which is amazing. It used to come from OPEC. And OPEC Plus is now just Saudi Arabia and Russia. So anyway, when you start looking at things like, do you think China will grow at all over the next 5 years or even next, 5 months? Well, what about their energy needs? What about iron ore, right? What about coal? What about copper? Okay, who supplies these things? Okay, so on and so forth. Just, that's what is dictating the value of things, guys. It's not like someone talked about the big, the banking cartel and blah, 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 blah. No, business. Okay? It's business. And China, let's say, is more self-sustaining than ever in the last 200 years. And so just for China to keep its own lights on and keep people fed and do minimal business activity, it will need to do business with the outside world. It's just how it is. Okay? So I want you to think about these relationships are far more important than a hedge fund, hedge fund traders or banking cartels and all that kind of stuff. Now, someone asked a question about interest rate differentials. Do that matter? And of course they do. But it's not that necessarily the interest rate differentials, especially when you're talking about, 1.75 in some emerging market versus 0.75 or negative 0.75. There's some differential, but not anything remotely close to normal. So it's why or how the central bank is dealing with its local economy is driving everything right now. The only real carry trade is really an EM issue, where you take a euro and it what is it, 0.1 negative interest rates, and you borrow that and you loan it to South Africa in the form of rand. That's good, and that is an emerging market carry trade, and you are doing an interest rate differential. But if this China-USA business model breaks down, you will get clobbered on the rand. The rand will collapse. And you're like, well, it's not that South Africa is necessarily losing a lot of business from the United States and China. That just might be true. But like everything is being crushed. And when you're an emerging market, you are way back in line before you get a chance to drink from the well. The well of the souls. So anyways, so I go back to all of this. I'm still a bear on US dollar. I'm still a bear on Japanese yen. We have an amazing array of very important events this week. And I believe this is a turning point in the year. Not necessarily the charts, but potentially. So, yeah. So I will be meeting with the day trading group at 3 p.m. This is for Europeans to look at their overnight trades and positions. And then I'll be meeting with the day trading group again at 8 p.m. for the Asia fade. Now, it's probably going to be quiet because a lot of Asia is closed. Not all of it, but a lot of it. But what has been falling might be falling again. I don't see why it has to change, but maybe it does change, right? A day can make a difference. So if you're in my day trading group, I will see you then, both 3 p.m. and 8 p.m. tonight. And for everybody else, I will see you in 24 hours here at the fabulous YouTube community we call Forex.Today. So thank you for being a subscriber, and thank you for being a client of Trader's Way. And if you haven't done so, please visit Trader's Way and open up a demo today. See you later, guys. Adios!